It was a crazy day for Alibaba, the Chinese tech giant initially surging after reporting earnings this morning, but closing today's session down 3% after a big midday reversal. Let's get to Dom Chu in the newsroom for all the details. Hey, Dom.
Well, Melissa, it was looking promising for Alibaba, at least for a little while today. The company that some call, of course, the Amazon of China. It posted an earnings miss, but the bright spot came from a 61% gain in sales, as well as a jump in the number of monthly active users on mobile devices on a quarter-over-quarter basis. Alibaba is also growing in areas like cloud computing, supermarkets, and entertainment. Sound familiar to anyone out there? It was, anyway, good enough for a pop in the stock that has been part of a broader medium-term sell-off in Chinese internet names so far this year. But by around 10:30 a.m. Eastern time today, that sentiment all changed to the negative, and pretty quickly. Baba shares dropped by over 6% intraday within just an hour, and a lot of the traders and investors out there look to Alibaba, of course, as the blue chip of Chinese internet names, a bellwether. So perhaps no surprise that Baba's struggles today rippled through the rest of that whole industry, taking down Tencent, JD.com, and iQIYI with it. It's been a painful few months overall for these Chinese internet stocks. Sina plummeting around 23% in just the past 3 months. JD.com falling around 14%. Tencent and Alibaba down a respective 13 and 11%. So, Melissa, what looked like it could have been positive data, to help kind of the value case for these Chinese internet stocks, turned into more questions about whether things can still get worse from here. Back over to you guys.
All right, Dom, thanks. Our next guest says, don't worry, there are 3 Chinese internet stocks to buy right now. Let's go off the charts with Todd Gordon of TradingAnalysis.com. Hey, Todd.
Hey, Melissa. Yeah, the obviously earnings have not been very good in the Chinese internet names, but technically from a long-term point of view, they've taken a big beating ahead of these earnings. I kind of feel like it was kind of baked into the cake here. So first, let's start off in KWeb. And actually, last time I was on Fast about a week or two ago, I was talking about this name. And we did get a really nice push down into this uptrend support that dates all the way back to 2015. This was that little pocket of volatility last week that really hit the market. But we went right down into this beautiful uptrend support. And again, we're working on a log scale. We're looking at percent change rather than notional change. And that's going to change where your trend line comes in. Really important to keep that in mind. So looks like the Chinese internet KWeb is supported. Specifically, as we drop down Momo, I have this trade on. I love it. You can see that the pullback has been much less severe here. Again, a very nice uptrend support on your semi-log percent change scale. These are very, very well supported here. Heading over to the next one, Alibaba. I know it was very scary. It was up to like 186, sold off down about 170 post earnings. But again, just a massive shelf of support right around 165. That goes back about 18 months. So until 165 breaks on the downside, you've got to continue to be bullish. I'm going to look to pick this up in my account. So I like Alibaba top side. The other one that was a miss, but still technically supported, you can't get too far out over your skis, is Tencent. Again, what a beautiful symmetrical channel here. You connect the lows, and traders are looking for that to hold support despite how bearish the fundamentals might be, how bad the earnings are. And then you can actually draw a perfect parallel channel and just see how much order there is in this very large Chinese stock. Again, we're holding support. This is the weekly chart. And if we draw down to the daily, get a look at the reversal that we had right at this orange channel. OK, this is like trading fourth dimension, like Back to the Future. So you got to remember what happened here on the weekly. This is the daily. So there's that big gap down. On the volatility we saw in the market, we've just come straight back bid. Even if the market comes back and gives back a little bit of the gains that we've seen over the last week. For instance, I mean, a lot of the markets are kind of doing this just over the last couple days. As long as we hold some lower levels, just a little bit lower here on this pullback following the earnings report, I still think those weekly and daily trends continue and support will be in existence. So I stay long.
You know, Todd, the thinking here for a lot of these Chinese stocks is that they're getting caught up in a lot of the trade concerns. Yep. I'm wondering if you think that is there a high correlation between some of these stocks, like an Alibaba, one of the biggest, and some of the major Chinese indices? And
I'm sorry, Melissa, say that last
correlation?
Oh, the correlation. Sure. I mean, the Alibaba is not very correlated to the other stocks. If you take a look at KWeb and Tencent and Momo, I mean, those had beautiful uptrends that just got caught up in this pocket of volatility in the trade war. I think it's correlated to the yuan selling off. Dollar yuan is trying to break out. But that Alibaba stock looks rock solid. I mean, it's just been sideways in a major trading range for years. So I think it's just been pretty rock solid, showing good relative strength. So while we're above 165, I think we go higher. But yeah, I mean, it's a volatile sector. Be sure to position size accordingly if you're playing in here. Use stops, but you know, there's money to be made in here.
All right, Todd, thanks. Todd Gordon, tradinganalysis.com. Ambassador.
Yes.
Todd likes Alibaba. What do you make? Why the midday reversal in your view?
Well, I think people started to listen to how they're going to be spending on a couple of these new retail. Koubei, for example, is a place they're going to be spending. I think the margins may be coming down a little bit. But, you know, if you think about these Chinese internet stocks, and an 8% intraday reversal is very dramatic. But you know, Todd talked about the technicals that he loves. He's got these beautiful little charts and whatnot. I mean, the fundamentals, I think, are extraordinary. So to me, ultimately, what happened with the Chinese internet stocks is they're being treated, one, like they're trade war stocks. And if you think about what we got from Alibaba today, 61% growth in local e-commerce, data, basically their version of data center, their version of AWS, growing over 90%, 93%. So the concern really is whether their core business is starting to lose some of its margin. The other is that, you know, the valuations, it trades roughly 31 times 2019, 21 times 2020 on a PEG ratio of less than 1, significantly cheaper than Amazon. And again, the emerging market headwinds are important. If you didn't know this, look, Tencent, between Tencent, the stock, and the 80% of Tencent that Naspers owns, that's 6.5% of the emerging market index. We all know what's been going on in EM. You throw in Alibaba, that's 10% right there. They get pushed around when EM gets pushed around. That's the story.
You had a trade on Baba.
I did. I had a trade on just, you know, last week it got crushed with all of them. And I thought, all right, it seems, I did it through options. It was a very Pete-like trade. It traded up on Monday. I sold half and sold half on Wednesday. Interesting. I saw it up 8 this morning. Felt really, really dumb. And then by the end of the day, I felt much better. Sadly, my whole sense of self really was determined by where did Baba end the day. So that.
And how are you feeling?
I'm feeling good.
I'm feeling good.
All
All right.
that aside,
Good.
all that aside, I think it's interesting here. Actually, I think it's a buy.
So the problem is, though, that everything Tim said, accurate, fundamentals are extremely bullish. But when it sold off today was when President Trump started talking about ratcheting up trade war. So it sold off a little bit before 11 o'clock. So this is getting tied up in it. So unfortunately, I still own it. I have a great profit in it, but I'm giving some of that back. I'm willing to hold on to it. 165 is the crucial level that Todd's talking about.